The U.S. Senate has taken a significant step forward with the advancement of the Clarity Act, igniting optimism across the cryptocurrency market. But what does this mean for the future of digital assets in America? Looking ahead, the crucial question is whether the Clarity Act will continue to advance through the Senate without facing dilution or delays. This legislation aims to provide a comprehensive regulatory framework for cryptocurrencies, addressing the long-standing ambiguity that has hindered innovation in the sector. Historically, the lack of clear regulations has created an environment of uncertainty, discouraging both investment and innovation. The Act's progression could signal a shift towards a more predictable regulatory environment, which many industry stakeholders view as essential for fostering growth and attracting institutional interest. If the current momentum holds, we could witness a sustained rally in Bitcoin and large-cap altcoins, driven by a sense of regulatory relief. Investors have been increasingly optimistic, as clarity in regulation often correlates with increased institutional investment and market stability. Furthermore, tokens like XRP, which have been burdened by legal uncertainties stemming from ongoing litigation with the SEC, may experience notable price increases as investors regain confidence in the market. The anticipation surrounding the approval of crypto-linked ETFs and treasury strategies could escalate, further invigorating market activity and opening new avenues for investment. However, if the bill stalls or encounters significant opposition from lawmakers wary of potential risks, the enthusiasm generated by its advancement may quickly dissipate. The crypto market has historically been sensitive to regulatory news, and a setback could lead to a sharp market correction, affecting millions of investors. In the coming days, investors should closely monitor updates on the legislative progress of the Clarity Act. This pivotal bill has the potential to reshape the future of cryptocurrencies in the U.S. market, paving the way for a more robust digital asset ecosystem as we move into the latter part of the year. The journey leading to the advancement of the Clarity Act has been fraught with regulatory challenges for the cryptocurrency sector. For years, the industry has operated under a regime of enforcement-first regulations, particularly in the United States. This environment of uncertainty has dampened valuations and hindered institutional adoption of cryptocurrencies. Key decisions from regulatory bodies, including the SEC's strict approach to crypto enforcement, have created a climate of fear and hesitation among potential investors. Over time, this persistent ambiguity has resulted in significant headline risk for exchanges, token issuers, and decentralized finance protocols. The Clarity Act is perceived as a response to this tumultuous backdrop, signaling a potential shift towards a framework-based approach to regulation. Historically, the regulatory landscape has treated all digital assets uniformly, stifling innovation and leading to a lack of clear guidelines. By proposing a more tailored regulatory framework, the Clarity Act aims to address the unique characteristics of various cryptocurrencies, fostering a more supportive environment for innovation. The impact of this legislative effort could be profound, potentially restoring investor confidence and encouraging institutional participation in the crypto market. A more defined regulatory structure may attract long-term investments and allow startups to thrive without the constant threat of enforcement actions. Moreover, a clearer framework could enhance consumer protection and promote responsible practices within the industry. Looking ahead, the successful passage of the Clarity Act could mark a pivotal moment for the cryptocurrency sector, paving the way for a new era of growth and innovation. As stakeholders await the outcome, there is optimism that this legislation will not only clarify the rules, but also stimulate economic opportunities within the digital asset landscape. The industry is poised for transformative changes that could redefine its future trajectory. The advancement of the Clarity Act holds substantial significance for the cryptocurrency market. This proposed legislation aims to provide a comprehensive regulatory framework for digital assets, a move that many believe is long overdue. Over the past few years, the cryptocurrency sector has experienced explosive growth, yet it has been marred by regulatory uncertainty. Investors have often found themselves navigating a complex web of state and federal regulations, leading to confusion and hesitation. The lack of clear regulations has left many potential investors on the sidelines, wary of entering a marketplace that has seemed unpredictable. Establishing clearer rules can reduce the legal overhang that has historically affected major tokens, ensuring that market participants understand their rights and obligations. This clarity is crucial for fostering an environment where innovation can thrive. It opens the door for institutional participation, which has been largely stymied by the regulatory fog. Institutions such as hedge funds, pension funds, and insurance companies may find it easier to invest in cryptocurrencies once the Clarity Act is enacted. This influx of capital could lead to a more substantial and mature market, enhancing liquidity and potentially stabilizing prices, which have historically been volatile. Furthermore, the passage of this act could support the launch of more exchange-traded funds, ETFs, and other financial products linked to cryptocurrencies, making them more accessible to everyday investors. The possibility of transforming crypto from a high-risk investment into a more stable asset class is enticing for many. This shift could attract a broader range of participants, including those who have been wary of the volatility associated with cryptocurrencies. As institutional investors come on board, the market may experience increased legitimacy, reducing the stigma that has historically plagued the industry. Looking ahead, the implications of the Clarity Act could be profound, reshaping how cryptocurrencies are perceived and valued in the financial landscape. The act could usher in a new era of innovation, encouraging startups and established companies alike to explore blockchain technology and related applications. As the act progresses, stakeholders will be keenly observing its impact, anticipating a future where cryptocurrencies evolve into integral components of diversified investment strategies, enhancing the overall stability of the financial ecosystem. On May 18, 2026, reports confirmed that the Clarity Act is moving forward in the U.S. Senate. This development came after a last-minute deal that has generated renewed momentum for the legislation. The Senate's approval marks a pivotal moment for the cryptocurrency industry, which has long awaited more comprehensive regulatory guidelines. The Clarity Act aims to provide a clear framework for classifying digital assets and establishing rules for their trading, which has been a contentious issue within the financial sector. The lack of consistent regulations has hindered institutional investment and left many potential investors wary. This legislative progress has sparked a notable surge in optimism, particularly among Bitcoin, XRP, and other major tokens. Investors are now more hopeful that the regulatory landscape will stabilize, encouraging broader participation in the market. As a result, the market is witnessing increased discussions about institutional products and new ETF filings. Major financial institutions have been eyeing the cryptocurrency space, but many have held back due to regulatory uncertainties. The Clarity Act's advancement is significant as it embodies a potential shift towards clearer regulatory frameworks for digital assets, which could provide much-needed clarity to investors and institutions alike. Unlike previous regulatory efforts that resulted in confusion and uncertainty, this bill's movement is seen as a promising sign for those invested in cryptocurrencies. Analysts suggest that a well-defined regulatory environment could lead to enhanced market integrity and reduced fraud, fostering a safer investment atmosphere. The positive sentiment surrounding the Clarity Act is palpable, with many market analysts predicting a surge in the adoption of cryptocurrencies among institutional players. This increased legitimacy could pave the way for innovative financial products and services, further integrating digital assets into the mainstream financial ecosystem. However, the bill still faces hurdles in the legislative process, as differing opinions on cryptocurrency regulation persist within Congress. Observers will be closely monitoring upcoming debates and amendments to the bill, which could shape its final form. If successful, the Clarity Act may not only redefine how cryptocurrencies are regulated in the U.S., but also inspire similar legislative efforts in other countries, potentially leading to a global shift in cryptocurrency governance. As we await further developments on the Clarity Act, how will this shape the future of cryptocurrencies? Share your predictions in the comments below and subscribe for daily deep dives into the evolving world of finance.